The market added 25,000 homes to available inventory this week. That's bigger than our models have predicted. And it's really fascinating to see how quickly this market can get back to normal levels of inventory. While many of the hottest markets like Phoenix, Austin, Salt Lake City have come to a screeching halt, there is still demand in much of the country. So we'll look at what is slowing and what is not in this week's Altos Research Market Update. Every week, Altos Research tracks every home for sale in the country. We analyze all the pricing, all the supply and demand, all the changes in that data, and we make it available to you before you see it in the traditional channels. If you aren't using Altos Research Market Reports with your clients, your buyers and sellers, now might be the time to step up. Go to altosresearch.com and book a free consult with our team, because everybody is worried about what's happening right now. And they need you to help them see clearly. I'm Mike Simonsen. I'm the CEO of Altos Research. And here's what we're looking at for the week of June 27th, 2022. Available inventory of unsold single-family homes rose another 6.2% this week to 444,000 homes. We now have more homes on the market than we did at any point last year. Available inventory is still 50 to 70% fewer than we normally would have this time of year. So that's true even in places where inventory is really skyrocketing like Phoenix. So it's going to be interesting to watch how quickly we return to those normal levels of inventory. I've been of the view that it'll take several years of higher interest rates to build inventory back to that normal, what would normally be like 1 million homes on the market, single family homes available for buyers this time of year. If you listened to the Altos Top of Mind podcast last week, I interviewed Logan Mohtashami of Housing Wire, and you can hear his take on how it could be as soon as next summer when we're back to normal. It surprised me when he said it, but his logic is reasonable. So even though I've been surprised at how quickly we've added inventory this year, I'm still of the view that there's no giant wave coming. I just don't see where it would come from. In any case, we've had year-over-year inventory gains now from next year, and we will have it for next year as well. So that, frankly, is unusual in itself. We've had annually declining levels of inventory for most of the decade. So here's one way to look at inventory changes and what might be coming. Each bar in this chart is a week of inventory change. Above the line is inventory climbed from the week before. Below the line, inventory decreased. Each color here is a year. The brown at the far right end of the chart is the forecast for each week for the rest of this year. You can see how each year we have spikes. Those are usually third week of May. And this year, our spikes are continuing into June. So we had one spike already in May. We just had this week another big spike in June, and probably into July as well. There's always a 4th of July dip, which is next Monday. So, we'll probably see another surge this week, and then the following week, we'll see the 4th of July impact lower, 2 Mondays from now. It looks like we'll end the year with about 525,000 single-family homes on the market. Though, if buyers stall further in the fall, it could easily be more than that. Really fascinating to watch. Home prices, meanwhile, ticked down this week. The median price of single-family homes in the U.S. is now $453,800. That's the first weekly downtick since like January. And this seems likely to be the first of the downtrend for the second half of the year. The price of the new listings is also down this week to $419,900. The new listings leads the active market by a month. The light red line here turns down before the dark red line. And new listings are now 2.5% off the peak. So seasonally, this is normal, but I'm keeping an eye out here for faster than normal price declines. We haven't seen them yet. Prices are sticky, but we're watching for that forthcoming because we can really see the demand changes when we look at price reductions. So we've been sharing our price reductions data each week, and here it is again. The percent of active listings that have taken a price cut before they sell, it's accelerating, record pace. You can see how steeply the dark red line here is climbing. Each line here is a year. And next week, we'll have over 30% with price cuts for the first time since Christmas 2019. Price cuts show no sign of slowing yet either. Normally by midsummer, the slope starts to level off. More price cuts happen in the third quarter and it climbs as you want to move that house before school or the holidays. But, we've been talking about this for several months. Sellers in August are going to be surprised by how slow it is. These price cuts are still accelerating. And there's a lot of sellers who try to take advantage of the market and they just miss the timing window. And you can really see the change in demand in our immediate sales tracker. This week, only 20,000 homes went into contract immediately after listing. That's the fewest in any week since February. We've had more new listings and fewer immediate sales this week than last year. Inventory is building. In 2 Mondays, we'll see the 4th of July dip like you can see last year in the middle of the summer. As a percentage of the new listings, you can see the immediate sales are falling dramatically. This week, 19.7% of the new listings went into contract within hours or just a couple days after listing. 1 in 5 with their bidding wars, down from 1 in 3 earlier in the year. You can see at the right end of the chart here, each week we have fewer and fewer in this crazy competitive state. In fact, you can also see that last summer, immediate sales actually picked up as a percentage in the second half of the year. If you recall last summer, I was surprised that the market was reaccelerating when it did. I thought it was going to start normalizing a year ago. That didn't happen. And that set us up for this crazy first half of 2022. So I suspect that won't be the case anymore. This line here, the percentage of homes going into contract immediately after listing, is going to keep dropping, probably under 10% by the fall. This means fewer bidding wars, more selection for buyers. This is one of the market changes that I'm actually most encouraged about this moment. For people like first-time home buyers who are finally able to have some selection and not in this crazy competitive market, with pressures to act irrationally. Again, when you're counseling buyers and sellers, this is really one way to communicate with them. Yes, the market is still surprisingly strong for homes that are priced properly. Still almost 20% went into contract immediately this week. But price reductions are climbing so quickly that the ones that don't price right are going to have an even tougher conditions later in the year. If you need to have these conversations with your client, go to altosresearch.com and sign up now so you can have the data in your hands, in the hands of your potential buyers and sellers today. All right, that's all the data we have time for today. More next week.